Gold and silver have been on an absolute tear, and it just keeps going. We're talking about silver jumping from around $28 a year ago to over $100 today. Gold has jumped from around $2,700 to over $5,000 in the same time. These are now among the best performing asset classes globally over the past year. Meanwhile, Indian equities, not so much. The Nifty 50 squeezed out about 10.5% in 2025 but has slumped 4% so far this year. Naturally, the investor's mind is in a tizzy. Should they be piling more and more into precious metals instead of stocks? Where do gold and silver prices go from here? How can an investor distinguish between a bad day and a crash? And are there other precious metals good to park their money at? We are trying to answer these and more questions in today's episode. It is Tuesday, the 27th of January. I am Kairavi Lukka. This is the Morning Brief. To help us understand the rally's drivers, sustainability, and strategy, we are joined today by Naveen Mathur, Director of Commodities and Currencies Research at Anand Rathi Share and Stock Brokers. Hi Naveen, welcome to the Morning Brief.
Hi, Kairavi. How are you doing? And thank you for hosting us.
So, Indian gold and silver ETF investors have made some massive gains over the last few months, and most of us are trying to make a sense of where does this rally now go. Naveen, as someone who's tracked commodities forever now, what are your thoughts? What exactly is driving this surge in gold and silver prices lately?
We have seen 2024 calendar year and the last calendar year of 2025, I would say, giving unprecedented returns. The 2024 year for gold has been around 32% on the calendar year. And 2025, Jan to December, has been phenomenal to an extent of 66 or 67% in case of spot gold in dollar terms. And because of the rupee depreciation, the Indian gold has given returns of around 76% odd. We speak about silver too, Kairavi. So last year, the silver has given 2025 calendar year returns in dollars around 148%, you can say 150%. And the Indian silver has given returns of around 170%. Now, the returns are phenomenal for various reasons. We do have pressures on the geopolitics. We have economic pressures. We have all the concerns which can be good for a safe haven. And rightly said, the ETFs buying, not just in India, Carol, but the global ETF buying too have prompted the demand, which is really phenomenal. And therefore, the prices definitely have moved up.
And Naveen, I believe most of our listeners today will have tuned in to know, where does this rally go? Where do silver and gold prices go from here? And, are there more legs to this rally?
If you really ask me, coming into 2026, we were hoping for some kind of a correction, but we are living in a very uncertain world. The rattles on the tariffs, the geopolitics, all these factors have created an unprecedented, I should say, uncertainty in the global environment and the economics too. Now, as far as the outlook is concerned, there can be profit booking, but it doesn't seem to be an immediate one because as we entered into 2026, we have the Greenland issue coming up. We have the Iran conflict within internal domestic protests and all. So Middle East is again on a fire line. Greenland has been a recent phenomena. Now we are talking about Canada, the tariffs on 100% Canadian imports to the US. All those things mix up, and particularly the difference of opinion between the West and particularly, I should say, the European Union nations and America. So I would say that all these factors would be quite strong in coming days and a fortnight to be looked out or to be watched out for. And if these things pan out continuously favorable to the goal, I would say the prices would definitely move up. I think when the markets open in India on Tuesday, we might see an uptick both on gold and silver. People are projecting about 5,200, $5,500 levels. So I would say that the markets are bullish. The gold definitely holds good uh, as a portfolio diversifier for people who want to be part of the gold story from here on onwards.
And what about silver now? Let's just, because, that has done phenomenally well, in the last year. So, I think people these days are really curious about silver as well. So, what do you think about that?
Silver is an industrial metal and it is a part of the bullion asset class too. So it takes some part of gold and bullion, and at the same time, it is largely an industrial metal too. Now, around 56% of the consumption of silver goes into various industrial uses, and current industrial uses include semiconductors, the AI technology, the solar, I would say the EV revolution, etc., etc. So all these things on the industrial side are positive in terms of the demand for silver globally, and therefore the silver prices to an extent have crossed $100 levels. I would say the upside remains pretty strong to an extent of 3,45,000 per kg. And the next, if it breaks that particular level, Kairavi, then maybe 3,52,000 for a kg in Indian market. The silver ETFs themselves have grown multifold. Means 2024, I remember the figure of around 12,000, 13,000 crore worth of an AUM across the silver ETFs. And as we stand today, we are at around 70,000. But I would also be cautious telling investors that there can be profit booking because the prices have risen steeply in the last couple of months. And may be the case, any negative trigger for both can impact the prices on the downside. But overall trend remains bullish for both gold and silver.
One thing that we've noticed about these ETFs, Naveen, is that they continue to see, more amplified moves compared to the underlying metal. Like we've seen this before and we saw this last week as well. Gold and silver fell slightly after Donald Trump's Davos address last week. You open your broking app one day and you see your ETFs have crashed, 10%, 20%. So, what do you do on a day like that?
So just don't do anything. So if you buy a stock with a conviction and it doesn't perform and it fails to come up to your expectation, you keep it for a simple reason that you know that it'll definitely do good sometime because of your conviction. I would say you should see gold not from the return perspective, just as the part of the portfolio core. Even if it is on the negative side, if it is falling, don't think, don't think that I am losing on returns. You just have to be, in fact, you should double down on your investments in gold if you are not to an extent of 10 to 12%. Say, for example, if you have bought gold at 1 lakh 40, it has come down to 130, should not panic because that particular logic doesn't work. It is a portfolio diversifier. You are not seeing it that, oh, if I would have booked my profit at 1 lakh 40, or if I have got entry at 1 lakh 40 today and I'm losing 10,000 per 10 grams, is it good to hold? No. You should always be holding gold as part of the portfolio.
Got it. That is a very fair point that you've made, sir. So, when we have conversations around silver, we usually hear about the late 70s or 80s when, prices crashed from $50 to $5 or, even the sharp fall that we saw in 2011, right? So, do you think that a decline of such magnitude is still possible today, or are markets better insulated right now?
So when we are talking about April 2011, the silver touched an high of around $49 per troy ounce. Okay. At that particular point of time, silver as a commodity has not been a very financialized kind of an asset class. So, that particular point of time, it was a concentrated risk. At this particular point of time, as we are talking, it is a very diversified risk. But as I mentioned in my earlier conversation, it's a very, very dynamic commodity. Means, say, for example, if something goes wrong with AI's story tomorrow, then the questions would come in on the demand of silver. Something goes wrong with respect to the EV story or the solar story tomorrow, the questions would come on silver. Coming back to the question, the probability of falling, you don't know what would happen tomorrow. But your risk appetite should be little higher than any other commodity. In case of silver, it's a little riskier commodity, but then important commodity to be part of the portfolio, an important commodity to have certain alpha generating strategies to enhance your portfolio returns, or I would say the risk adjusted returns for an investor.
Got it. Got it. Thanks for the clarity, Naveen. And one last question before we wrap this up. Beyond gold and silver, are there any other metals that you see performing well this year? We've already seen a strong rally in copper, but are there any alternate metals where you would recommend investors consider some exposure?
I would say copper would be the one.
Okay.
Continue to be on the good side. Aluminium can be the other commodity to be looked into. But out of the two, I would put my bets aluminium a little higher bet than copper. Again, for the same sake of reasons that it has rallied, and to an extent, the fundamentals largely might have been discounted in the prices, or if they are not, they would be discounted in due course of time. The story on the demand and supply continues to be very strong for copper. And this particular commodity is just not like silver, it is a pure industrial commodity. The only fundamentals which are playing for the prices in case of copper are demand and the supply situation, plus the China and the mines production. So I would say that being an only industrial commodity, you need to be cautious about, because if the situation where we are in today, geopolitics where we are in today, the global economy doesn't do well, then the industrial metal demand can decline, which might impact the prices on the downside. It has to be seen from the perspective of where the geoeconomics or the global economy are headed.
Naveen, it's been lovely talking to you. Thank you for coming on our show.
Thank you.
So, with geopolitical tensions running hot and markets feeling shaky, gold and silver are clearly not done yet. We'll most likely be seeing more upside in the months ahead. Gold, as Naveen said, that's your steady hand even when everything else is going sideways. Silver, totally different animal. It's volatile, and after this massive run up, you have to be careful. If you're more risk averse, honestly, now might be the time to book some profits on silver. But keep that gold allocation because that is what keeps your portfolio grounded. That's it for today. You were listening to this episode on The Morning Brief. It was produced by Anirban Chaudhary, sound designed by Amrit Redji. A new episode of The Morning Brief drops every Tuesday, Thursday, and Friday wherever you get your podcasts. Keep listening.